Opendoor is seeing a bit of selling pressure this week, folks, but the options chain and the short interest remain very, very juicy. I'll break down everything Opendoor in this episode, including why I believe if you zoom out, the bullish trend is still intact. We'll also cover some of the bigger macro news, including Nvidia, the world's largest company, reporting earnings on Wednesday and how that impacts the markets. We'll also break down some drama with Cracker Barrel, of all companies, and some key economic data yet to come this week. All that and much, much more on this week's Midweek check-in. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to like, subscribe, share with a buddy, and don't forget to follow us wherever you listen to podcasts. And now, folks, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you want to support the channel, make sure to check the links in the description. All right, folks, so Opendoor. We're going to kick it off with the hottest stock in the market right now. We have seen some selling pressure so far this week. Let's jump right into the daily chart here. This was Wednesday. We were down 14%. And you can see these wicks that happened on Monday and Tuesday, clearly showing that sellers were in control for majority of the day. Monday, we had an initial push up to a new 52-week high. And for a brief moment, it looked like we were going to break $6. And then it got pushed back down. And basically where we find ourselves right now, as far as some of the key levels that I'm paying attention to, Fibonacci retracement levels to be exact. Right now, 382 is the 38% Fibonacci retracement level that I am paying attention to as I would venture to say a pretty strong support for Opendoor. We did unfortunately crack the 23% Fibonacci retracement level, which was $4.60 after holding it on Tuesday. And then Wednesday, we just had a ton of selling pressure. So as of right now, at time of recording and after hours, we're sitting at about $4.20. And, into the close on Wednesday, we were able to hold $4. There was a lot of shares sitting on the bid right at the close there. So that was definitely a level that the bulls were defending, a key psychological level, makes sense. But if we do see that level break and we are unable to get a pop from that $4 level, I would fully expect us to retrace to 382. So that's really the next level that I'm paying attention to. And look, here's the thing, right? A lot of people get caught up in the day-to-day movements of really just any stock, but especially one that has so much retail momentum behind it, right? Such as Opendoor, where everyone's eyes are on it. Here's the thing you got to remember, folks. This is a volatile stock. Volatility, you need it to make profit, right? It doesn't just mean things go up. Things also go down. And sometimes that's okay because you need a reset, right? And so, I just want to take a look at what Eric Jackson tweeted out earlier on Wednesday. Day 8, still at Drake's house. Gotta love it. This guy is dedicated. Opens down 14% today. That's the short-term noise. The long game is what matters. And we are still up huge from Friday morning. And you can see from his board here, stocks go up and down. Long game, simple, short, and sweet. And it's so true, right? Listen, stocks do not just go parabolic, and they also don't just go down, folks. There is a trend being established here, and I can understand why a lot of people are, frustrated with the down moves. You're watching your P&L fluctuate. But for anyone involved in this, you got to remember why you got into it. And if it's anything near what Eric Jackson's, take on the company is as far as a long-term stance, then you have to understand you're playing the long game, right? So as of right now, we are sitting at, again, $4.20 in after hours. And I want to take a look here real quick at basically a 10-day, 30-minute chart, right? So if we look at the 10-day, 30-minute chart, just to kind of get a better idea of what's been going on intraday. As you can see here, if we go all the way back to August 14th, we were basically stair-stepping up, came back down, tested out this Fibonacci level of 319 here, the 50% retracement. We got our shot up here at the end of last week. And then, as you can tell, on Monday, like I was saying, we hit a new 52-week high at 587. And then basically at that point is when we saw, sellers step in, right? And if we take a look at what happened just, on Wednesday in particular, the selling pressure was really right out the gate. And we were unable to get a higher low really at all throughout the day. And then basically by the time we hit 3 p.m., that's when a lot of the selling pressure came in, pushed it down past this kind of, consolidation zone that we had and pushed us all the way down to $4. So like I said, as far as next support, I'm looking at 382 as that 38% Fibonacci level. But here's really what I want to highlight right now is the fact that, yes, you had a 14% down day. Listen, Opendoor is going to, like I said earlier, it's going to be volatile, right? There's going to be a ton of movement in both directions. But the thing that I find promising when looking at Opendoor on a daily chart is the fact that we are establishing higher lows. I think that's a very, very important thing to keep in mind. The fact that you have these higher lows happening. And if we just take a look at, the volume, right? Because this is something that I've been paying attention to. Take a look at the volume on some of these red days that we've had, right? See how it's lower down here? Basically what that means is that you have less people participating during that moment, right? And I think that's important to highlight because it shows less conviction. When you have these volume days down here that are a bit less than some of the green days like this, right? Here's another good example. You have this red day here smashed in between these green candles, and you can see how the volume down here is higher, right? And so you have these pullbacks. Here's another example where the volume is lower relative to what we've seen on green days, right? And so I believe that is a bullish sign. The fact that you have less conviction on a red day is a good thing. And if we take a look at what we've seen recently out of the volume, obviously you had a ton of volume on Monday, 52-week high, and look how it's dissipated, right? It's gotten, less and less volume over the past few days. And even on Wednesday here, you can see that the volume was half of what we saw on Monday on a red day. And I think that's really the key thing to highlight here is the fact that we saw less volume on a red day, shows less conviction, right? Yes, it was down 14%, but it wasn't on insane volume relative to what we've seen over the past month, which leads me to believe that there's less conviction. So I think that's a good sign. And look, just because something happened in the past doesn't mean it's going to happen again. But I will say that the last time we saw this kind of setup where you had some green days and then a couple red days with volume going down, descending like we're currently sitting in, you had these giant green candles as it broke out to make that next leg up. So this is potentially something we could be seeing on Thursday and Friday if we find support at 4 and then curl back up, or even come back down to 380 and then, retrace up. So that's what I'm paying attention to on the chart. When you zoom out, folks, it's still bullish. I still, feel very comfortable sitting in my position personally, but to each their own. You got to do what you got to do. I understand the emotions with red days, but as of right now, I think we're looking good. And let's not forget the fact that the RSI had a chance to reset, which is an awesome, awesome thing. The RSI, a few days ago was sitting, at basically 70. I highlighted on the market prep video that we put out on Sunday that we were technically, after last Friday, in overbought territory, sitting at 76 on the RSI, and probably needed to cool off. And that's exactly what's happening right now. And as of Wednesday's close, you got an RSI now sitting at 60. So it's had a chance to reset. So we will, see what the rest of the week has in store for us. Also keep in mind the fact too that nothing has really changed is from a fundamental standpoint, right? I mean, we're still looking for a new CEO. That news could drop any day. I think that's important to highlight, right? And, speaking of that news, this was a interesting piece that came out from the Motley Fool. Not always the best place to get your news. I have mixed opinions on them, but I thought this was an interesting one they put out. 3 catalysts that could send Opendoor stock soaring even higher. So they just basically highlight a few key points here. And I have to agree with them because I think they're right on some of these points and really the significance for Opendoor as it relates to these points. So the first one, of course, is interest rates, right? First and foremost, the biggest potential upside catalyst, aside from pressure that comes from meme stock activity, would be lower interest rates. And there are a couple of big reasons why this could have an impact. Most importantly, lower interest rates could help thaw a stagnant real estate market. Many homeowners who would love to move feel stuck in their homes because they have to give up their low mortgage rates. Many would-be home buyers find homes far less affordable with mortgage rates in the 7% ballpark than they would if rates were, to drop significantly. So, and obviously, as this article highlights as well, Opendoor borrows money to fund a lot of its operations, right? So obviously, interest rates are going to have a big impact on Opendoor. Part of the reason why we saw such a significant move up last Friday was due to the fact that you had Jerome Powell at the Jackson Hole Symposium basically alluding to a change in how they're addressing monetary policy and basically signaling that we're going to be getting some quantitative easing, i.e. rate cuts. And so, that was significant for Opendoor. So that's one of the points this article highlights here. Another one, the right leader could make a big difference. So obviously Kerry Wheeler stepped down a few weeks back as we covered. And right now the board is searching for that next CEO. It's been almost 2 weeks now. We don't have a new CEO yet. And honestly, the longer it takes, I think the better, because it just goes to show that they're really putting in due diligence, right, to find the right person. Initially, I thought it would be a bit nerve-wracking if they didn't come out with a replacement right away. But, in hindsight, I think they are handling this the right way. And I think Shrisha Radhakrishna acting as interim CEO is a stable conservative move for the company as they search for that next leadership. And really just boils down to whether or not you trust the board to do that. Now, of course, we would love to have Eric Jackson on the board. That hasn't happened yet, but if he does get put on there, that's just going to be more bullish momentum for the overall company as far as that long-term fundamental outlook. And then another thing that this article highlights as well is the snowball effect in play. So finally, and we saw this in many companies in the 2021 speculative boom, there can be somewhat of a snowball effect when it comes to prices of hot stocks. And this can take several forms. One is a potential short squeeze. In late July, Opendoor had about 23% of its float sold short. This isn't in pandemic era GameStop territory, but an elevated level of short interest. If the stock price starts to rise further, there could be a wave of investors who need to cover their short positions, which could push the stock higher. As investors saw with the famous GameStop short squeeze, this can create a snowball effect that pushes a stock much higher. To be perfectly clear, this would likely be a short-lived catalyst. And yeah, I would definitely agree with that, given the fact that, the short interest is nowhere near what we saw with, GameStop in 2021, but it is still elevated. And if we take a look at the rate cut odds, speaking of those, according to CME Group, right now we're looking at about an 88% chance of a 25 basis point cut happening in September. So that's great news. Great to see. And speaking of that short interest, like the article mentioned here, if we look at Fentel.io, at time of recording, short interest percentage is currently sitting at 23.43%. So very elevated. Typically anything over 10%, generally speaking, for a stock is high. The fact that you have over double of that right now for Opendoor is very significant. So, and let's not forget the fact too that Opendoor is still one of the hottest retail stocks out there right now. If you look at apewisdom.io, I just checked it earlier today, and we're currently sitting third on the list as far as top trending stocks on Wall Street Bets. So it is very, very much still in play from the retail interest perspective. So don't let a 14% down day get you down. You need the volatility to get the moves up. The stock is going to remain very volatile as long as there are eyes on it, as long as you have news catalysts that are out there. And so I would fully expect to see more of this. You just got to be able to stomach it. And if you can't, then that's when you find something a bit more conservative. So let's take a quick peek here at the options chain for Opendoor. So one of the things I noticed here also that I found very encouraging from Wednesday's 14% down day is the fact that we had a put to call ratio of 0.38, folks. 0.38. I can't tell you how many red days I've covered now on Opendoor where I go to look at the options chain. I expect to see a bearish options chain. And in fact, we see the opposite. And that's exactly what we got on Wednesday. 0.38. So you had over 600,000 calls transacted relative to only 240,000 puts. So again, a very, very bullish options chain. Usually 0.50 for a put to call ratio is about standard for, a stock that's trending up, that's fairly bullish. To see 0.38 is insane. We've even seen some days where it's even lower than that, in the realm of 0.28. So the options chain remains very bullish. And as far as the deltas that a lot of these calls are being transacted at, they're not lottos, folks. They're not deltas between 0 and 20. The majority on Wednesday were dealt between 41 to 60. So I think you have a lot of people stepping in on a dip opportunity to scoop up some cheaper premium when it comes to buying calls. The current IV percentile right now for Opendoor after Wednesday's session is currently sitting at 49%. So 49% of the time it's lower. It's 50-50 right now. So not a bad spot considering how volatile this thing has been in recent days. And if we take a look at the deltas on the put side, 31% of them were deltas between 0 and 20. Those are lotto puts being bought, right? They're super cheap relative to some of the higher deltas. So there's a bit more conviction on the call side. That's, definitely something you want to see if you're long this stock, right? If you're bullish on Opendoor, you want to see the options chain backing that up. And we do continue to see that. Now, as far as the next monthly expiration, that's going to be September 19th. And if we take a look at some of the open interest that we have right now on this options chain, you have a ton of interest, as I've mentioned before, sitting at $9 strikes. According to the deltas on those, they're 14, so those are technically like lottos. But you got 45,000 open interest sitting right there at the $9 strike. So in the magical scenario where we are able to get up near that $9 strike before September 19th, obviously these deltas are going to explode. And if that happens, market makers are going to have to buy up shares. You might be in a gamma squeeze territory kind of thing. But some of the closer strikes to maybe pay attention to, you have a decent amount of open interest sitting at $5 right now and also sitting at $7. So you got about 31,000, almost 32,000 in open interest on each one of those strikes respectively. Relative to the put side, if we take a look at the open interest there, you do have 40,000 sitting at $2. But to be fair, the deltas on those are 0.04. So again, those are basically lottos on the put side, but that is a notable amount of open interest to be paying attention to. But all in all, the options chain looks very bullish. If you take a look at the daily chart, it looks bullish to me. We got this trend line right here that remains intact. And really on Thursday, I would not be surprised to see a bounce. I will most likely be looking to kind of buy the dip around that $3.80 to $4 range because I do expect a rebound there. So that's what I'm paying attention to. But make sure to drop a comment. Let me know how you feel after the emotional roller coaster that we've seen to begin this week with a 52-week high and then a ton of selling pressure through halfway part of the week. So that's what I got for you on Opendoor. Let me know if you're in it. Let me know if you're playing this or sitting on the sidelines. We're halfway through the week, but I think we're due for a bounce at this point. All right, let's move on to some of the overall indices and take a look where we stand right now. So first of all, I want to take a look at the S&P 500. This was from Wednesday. We actually hit a new all-time high, surprise, surprise, on the S&P 500, sitting at 64.87. We did break out above my Fibonacci level here. And really, at this point, folks, it really seems like we're just going to keep climbing to 7,000 at this point on S&P. So that's where we stand right now on that. If we take a look at the tech-heavy NASDAQ via the Qs, sitting at 573 as of the close on Wednesday, back above the 20-day moving average. Good to see. The Dow's been killing it. It actually hit a new high a few days ago and basically closed on Wednesday at 456. Looking at DIA, that's the ETF for the Dow, so looking pretty good there. If we take a look at the Russell 2000 ETF IWM, sitting at 236 and hit a new 3-month high on Wednesday. So small caps continue to look very, very good. As far as some of the more notable reasons that we're seeing small caps do so well, I think it's fair to say that, the rate cut odds that happened with, Jerome Powell speaking last Friday definitely gave a boost to small caps in particular, right? They're going to be heavily dependent upon rates. And so the fact that you have Jerome Powell coming in last Friday and essentially saying they're probably going to start cutting rates is why you're seeing IWM move the way it's moving. So that's great to see. Quick check-in on the VIX, and the VIX is continuing to come off. It is under 15, which is a 5-month low. It closed at 14.85 on Wednesday. So good to see that. Let's do a quick check-in on Bitcoin at time of recording, sitting at 111,516, up 0.2%. And, one of the support levels I've been paying attention to on Bitcoin is really around this 111 area. And as of right now, we're kind of testing it out. So let's see if we can get a bounce on that. This is TradingView. If you're interested in it, check the link in the description. All right, let's move on to some macro news. So first of all, the largest company in the entire stock market, Nvidia, came out with earnings on Wednesday. This according to CNBC. Nvidia beats on top and bottom lines. Here's why the stock is falling. So Nvidia reported better than expected earnings and revenue on Wednesday and said sales growth this quarter will remain above 50%, signaling to Wall Street that demand for artificial intelligence infrastructure shows no sign of fading. The stock, which is up 35% this year after almost tripling in 2024, slipped in extended trading as data center revenue came up short of estimates for the second straight period. Here's how the company did compare with estimates from analysts polled by LSEG. So earnings per share, $1.05 adjusted versus $1.01 estimated. That's a beat. Revenue of $46.74 billion versus $46.6 billion estimated. That is also a beat. Nvidia said it expects revenue this quarter to be $54 billion plus or minus 2%. Though that number does not assume any H20 shipments to China, analysts were expecting revenue of $53.1 billion according to LSEG. As far as the company's 2026 second quarter results confirm that Nvidia's data center business remains entrenched in the global AI build-out. Nvidia finance chief Kohl told analysts on an earnings call that the company expects between 3 and 4 trillion in AI infrastructure spending by the end of the decade. Pretty significant. So Nvidia, obviously being the largest company in the stock market, definitely worth paying attention to. I believe I heard the other day that they actually make up about 8% of the S&P 500, which is massive. But if we take a look at how they reacted after earnings, they did come off a bit. They were trading at, Nvidia was basically at $181 at the bell on Wednesday and dropped down about $6-7 all the way down to $175. So the earnings reaction was not great. Look, they beat bottom and top line. However, the margins were starting to diminish relative to previous earnings reports. And so the street did not like that too much. And when you're the largest company in the world, you basically have to put up, as far as numbers go, you definitely have to overachieve. And even when you're beating, those margins are going to come in and play a factor. So the fact that Nvidia, they did beat, and I'm sure that will kind of settle out over the next few days, but that initial reaction to the stock, to the earnings, was not that great if you had calls on it. I thought about taking calls on Nvidia before earnings, and boy, oh boy, am I glad I did not. So that's where we stand right now. And really, at time of recording, if we take a look at, tech futures via, the E-mini NASDAQ down almost 0.5%, and the S&P down 0.2%. So, it's kind of dragging on the market. I would say more so obviously on tech, that Nvidia did not, get the stock price reaction that, the bulls expected after an earnings beat. But again, I think that this will be bought up within a couple days, and, Nvidia will continue to a new all-time high. The last all-time high Nvidia had was 184, and that was back on August 12th. All right. So that's what we got right now on Nvidia, and we'll continue to keep tabs on that because, look, it is the largest company in the stock market, so it definitely has an impact on everything. All right, let's move on now to some news about Cracker Barrel. Never thought I would be talking about Cracker Barrel on Stonkcast. This, according to the Wall Street Journal, how a Cracker Barrel logo change spawned a political firestorm. Cracker Barrel planned to celebrate a fall menu and logo makeover with a festive country music concert in New York City, but its new logo stole the show and not in a way the company intended. On Monday, the company apologized for how it communicated the changes, but didn't pivot from plans to keep updating the brand. The chain replaced its longtime logo featuring a man in overalls leaning against a barrel with a streamlined version featuring just the chain's name. The move engulfed the restaurant in a culture war firestorm with commentators online and some customers accusing Cracker Barrel of eschewing its country charm and heritage for a sanitized image. Critics have lobbed personal attacks on social media against Julie Fels Massino, chief executive of the nearly 56-year-old chain. Quote, she scrapped a beloved American aesthetic and replaced it with sterile, soulless branding, wrote the woke war room on X in a message shared by Donald Trump Jr. Quote, she should resign and be replaced with leadership that will restore Cracker Barrel's tradition. The fallout has shaved tens of millions of dollars from the public company's market value, spawned calls for boycotts, and risked the casual dining chain's turnaround plan. So this is wild, folks. I remember seeing some posts on X a few days ago about Cracker Barrel basically changing their logo, and it seemed like a bad move. I mean, if you take a look at the image that they tried to change it to, it actually seemed like they were going backwards. It had more of like a 2000s vibe. And right now we're really leaning into, I feel like more of the, my buddy said, like more of the traditional, kind of vibe when it comes to company logos. So it's almost like they replaced the thing that should be working right now with something that was outdated by 10, 15 years. So, this kind of reminds me of what we saw with, Target, just from a political angle, right? The market will be very quick to tell you if they like or don't like your political moves. And if we take a look at Cracker Barrel stock, which is currently trading at $62, I mean, this was the dump that we saw after they made that change. You can see this insane volume relative to what normally trades on Cracker Barrel. So obviously people had a pretty emotional reaction to the change. And you can see the minute that they came out and said, hey, we're going to keep it the way it is, now it's rebounding up. So very interesting, kind of funny what's going on right now with Cracker Barrel. Hey, look, I don't frequent the store all that often. I mean, growing up, every now and then, it's kind of like a classic childhood memory, I guess. But I just thought it was very interesting and kind of funny that you can have such a violent reaction, right? To changing your logo. So drop a comment. Let me know what you think about this. If you think Cracker Barrel should have just left this one alone to begin with, or if you think people are overreacting. But listen, Wall Street is definitely reacting to the news. So we'll see if it can make new all-time highs and see if they can kind of recover from this political mishap. But we know how long it's taken, companies like Target, right? Target had a bunch of a big fallout due to some of the political endeavors that they took on, right? And people responded negatively to that, and they lost a lot of market share because of that. And now they've kind of recovered that. So let's see if Cracker Barrel kind of plays out the same. So interesting, funny story. All right, let's move on now to one of the Wall Street bets, short squeeze retail plays, something I've called in the past more of a sympathy play of Opendoor, Kohl's. So Kohl's actually came out with earnings on Wednesday, and they were actually pretty good. So this article, according to Market Watch, Kohl's stock is soaring. Here's how the chain is winning over cautious consumers. Kohl's Corp said success appealing to value-conscious consumers with its proprietary brands, strength in its Sephora shops, and encouraging back-to-school sales led it to boost its profit outlook for the year. It's an encouraging sign for the retailer, which is looking to stage a turnaround after sustained sales decline. Kohl's shares were up 17.6% to $15.34 in midday trading. It's the first time since December that the retailer stock price has traded above $15 a share. The stock's rise on Wednesday pushed its share price to a 9.7% gain for the year. So this is interesting to me because of the fact that this is a heavily shorted stock, right? So they came out with earnings. Earnings were good, right? And so the fact that you now have this surprise beat, so to speak, and the stock pushing up really is going to put some pressure on the shorts. And obviously you had this massive run up that happened last month, along with, Opendoor and Krispy Kreme donuts and everything else that was running. So it had a high of 21.39 back then. But the fact that you had a good earnings beat gives this stock in particular kind of some extra fuel in a sense, because yes, you have the short interest, but you need the upward momentum. One of the things that can bring that is positive fundamental development, such as an earnings beat. So interesting development for Kohl's. I was taking a look at the options chain on this one in particular, not as heavy as Opendoor, of course. But as far as the IV percentile on it, currently sitting at 46%. So if you were looking to, maybe be a bit of a degen, you want to play some weekly call options on Kohl's coming off of this earnings beat, expecting shorts to cover. Right now, the premium that you'd be paying on this is actually not that bad, sitting at 46% on the IV percentile. So that is interesting. We'll be keeping tabs on Kohl's, and that could be, we've kind of seen Kohl's, we've kind of seen Krispy Kreme and Opendoor kind of run together for a little bit, right? They've kind of all been grouped together as what's called like the dork stocks, right? And so we could see Opendoor kind of benefit indirectly from bullish momentum on Kohl's. So I'll be keeping tabs on that to see if that actually plays out. But as of right now, that's where we are sitting on Kohl's. So if you're in that, congrats. Nice earnings beat, nice jump on the stock. All right, let's move on now to some juicy news on the Hill. So this, according to Fox News, Trump says he's always ready for legal fight as ousted Fed Governor Lisa Cook plans lawsuit. So for those of you who have not been paying attention, Trump essentially fired Lisa Cook from her Fed position because of some allegations regarding fraud, financial fraud. And so Trump is essentially firing her, and Lisa Cook is filing a lawsuit. So that's where we're at there. And according to this article, in the wake of the unprecedented removal of a Federal Reserve governor, President Donald Trump doubled down on his decision Tuesday, saying he is always ready for a legal fight after the ousted governor, Lisa Cook, signaled she would pursue legal action. She seems to have had an infraction, and she can't have an infraction, he said, and especially that infraction because she's in charge of, if you think about it, mortgages. We need people that are 100% above board, and it doesn't seem like she was, Trump said, referencing Cook's alleged misconduct in securing mortgage loans. The Federal Reserve acknowledged Cook's potential legal action and said in a statement that the U.S. Central Bank will abide by any court decision. Quote, Lisa Cook has indicated through her personal attorney that she will promptly challenge this action in court and seek a judicial decision that would confirm her ability to continue to fulfill her responsibilities as a Senate-confirmed member of the Board of Governors of the Federal Reserve System, a Federal Reserve spokesperson wrote in a statement to Fox News Digital. So this is interesting, and there's a lot of people questioning whether or not Trump is in a position where he can actually, fire somebody like this. And as far as, that the outlook, right, if she does stand down, that is just another position that Trump can fill with somebody who might be a bit more dovish, right, as it comes to rate cut odds. So we will definitely be keeping tabs on this. Cook was appointed by former President Joe Biden in 2022. She is the first black woman to serve on the Fed's board of governors. Again, she was basically accused of mortgage fraud on Monday evening, and she has denied any wrongdoing. So we will, of course, be keeping tabs on this, see if there's any new developments on it. But as of right now, that's where we stand on that. Okay, let's jump into the economic calendar. So as far as some of the data that we have gotten this week that would be beneficial, let's say for Opendoor, we got new home sales that came out on Monday. We talked about that on the last episode, the market prep that came out last Sunday. If we got a beat there after seeing a beat on existing home sales from last Friday, that could be more fuel on the fire, showing positive trends when it comes to the housing market. And we got that. So the actual was 652,000. The forecast was 635,000. So we did get a beat there on new home sales for July. So that's great to see. As far as what's coming up the rest of the week, Thursday, August 28th, GDP, you're going to get initial jobless claims at 8:30 a.m. And then Friday, August 29th is the big one, folks. We're going to get PCE, personal consumption expenditure. This is the Fed's preferred inflation gauge. So that comes out at 8:30 a.m. And so really what you're looking for as far as the odds of a rate cut in September, we want to see that inflation is tame. We don't want to see PCE getting out of control. So we want to see that number come in line, essentially. That would be great. And then definitely want to be keeping tabs on those initial jobless claims that come out today on Thursday, because the fact that if we continue to see the job market weakening and inflation stays in line, that is just going to be more fuel to the fire for the odds of a rate cut. So that's what we got for this week. As far as next week, obviously, Monday, September 1st is going to be Labor Day, so markets will be closed there. But we're going to get jolts, the job openings for July. That's going to be dropping on Wednesday, September 3rd. That's going to be another big one as it relates to the overall job market. So we'll be tracking that as we get closer there. Now, let's take a look at earnings. So obviously, Nvidia was the big one that happened on Wednesday after the bell. As far as Thursday, before the bell, we're going to have Best Buy, Dick's Sporting Goods. After the bell, you're going to get Dell reporting, Webull, just to name a couple. You're going to get Gap. And then Friday, August 29th, before the open, we're going to get Alibaba. That's a big one. So those are some of the earnings to be paying attention to this week if you hold any of these companies or you're an earnings trader. All right, so that's what we got for the midweek check-in. So obviously right now things don't look the greatest with how Opendoor has been moving Monday, Tuesday, Wednesday, halfway through the week. But let's see how we can wrap up the week on Thursday and Friday. Let's see if we can catch a bounce. I believe personally this is a dip buy opportunity, but hey, we'll see how this video ages, right? Make sure to drop a comment though. Let me know what your thoughts are on Opendoor, on the Cracker Barrel situation. Let me know if you think Nvidia is going to make a new all-time high. Let me know if there's any stocks that you want me to cover, that you want me to break down. Would love to do that. Definitely appreciate all the support. As always, make sure to like, subscribe, listen wherever you listen to podcasts. And folks, remember, as always, plan the trade and trade the plan. Have a good one.